Hey, Scott Berkeley here with Citywide Home Loans, and I'm here to talk to you a little bit about reverse mortgages. It's kind of a buzzword that people have heard but might not be so aware of all the different things that they can offer you. And so I want to talk a little bit about what is it, what needs does it address, what benefits can you get from it, questions you might have from it, and how does it work. So first of all, what needs does it address? First of all, most of you watching this have probably spent years, maybe even 30 years, paying your mortgage. So you start with a big balance and you're paying it down, and you're basically putting money into a savings account. That home is worth something, and as you pay down the balance, then you don't know that much on it. So if you sell it, then you've got a lot of savings there. But the problem is, how do you get to that money without selling it? Because you kind of want to still have a place to live. Well, reverse mortgages, or HECMs, which is an acronym for Home Equity Conversion Mortgage, can convert that equity into cash for you while you're still living in the home. So how does that work? Well, what happens is a HECM will replace your current mortgage, if you still have one, and start building a little balance so it'll grow over time. And in return, you of course get the cash to use right now any way you want it. That's one of the main draws of a HECM, is you can use proceeds any way you want it. You can get it any way you want it. You can get a lump sum all at the beginning in year one, or get a certain amount of time every single month for a set rate of time. However you want to structure it is how it'll work for you. And over time, that balance grows, the amount you owe. But one of the concerns people have is, well, my heirs or myself at some point find that I owe more than the home is worth. And there's three reasons why that's never going to happen. Number one is the amount you can withdraw in your HECM is limited upfront to 50 to 65% of your home, depending on some criteria such as your age. And so first off, you're not getting all the equity. Second off, the equity that is there is going to continue to grow. And the second reason you're not going to end up with more owing on the HECM than the home is worth is because the rise of property values will continue to go up, especially here in Utah. They've gone up, I think, 50% over the last 5 years, which isn't going to continue. But the underlying reasons for that growth is limited supply and increasing demand all the time. So that's going to push home prices up. So, but your HECM, the amount you've borrowed is fixed at the beginning, so you're just going to continue to add equity to your home. And third, in the worst case scenario, is what if something happened and the value of your home was less than the amount owed? Well, there's a federal law through the Federal Housing Administration that says that the lender that you would owe the money to needs to decrease the amount to what the fair value is, or the appraised value, if that were to be the case, and also 5% less, so that your heirs or you could cover any selling costs of the home to get out of that basically scot-free. So you don't really have to fear about owing more than you would borrow on that. Second, you'd probably only be living off a little bit, and so that's one of the reasons why you don't have to worry about the house being upside down. So how do you pay back the loan? You can either choose to pay it back on monthly installments, or you can choose not to pay it back. And you heard me right. It's one of the only loans I know of in the world where you can choose not to pay it back. And of course, principal and interest would just continue to accrue, but unless you have a life-changing situation, which is either you and or your spouse, if you're on the loan together, both die, or you move out of the home, then you don't have to pay the home back. You don't have to pay the loan back. So what happens then? Who does pay the loan back? Well, that would be your heirs when they inherit it, and of course they're still going to have equity in it. So that's one of the nice features of a HECM, is that you actually get to get back the money that you've put into the house for so long. A couple other questions people have is, what happens to my current mortgage if I have one? Well, that's simply replaced with this other financial tool that replaces that to pay it off. So you don't have two mortgages. You don't even have one. You just get to enjoy the benefits of the HECM paying you back. Another question is, am I being taken advantage of? Because these are generally for senior citizens and the like, and we know that there's people out there who are trying to take advantage of them all the time. Well, the FHA, Federal Housing Association, and HUD require that anybody who gets a home equity conversion mortgage first attend some counseling with an independent home equity conversion mortgage counselor. And that is done simply to make sure that you understand the terms of the loan, as we'll also outline. And of course, you can talk to other professionals, financial professionals, and family members, whoever you want to. You're not obligated to anything at any time. And what is the process and how do I qualify? First off, one of the two borrowers has to be age 62 or older, and they also have to be able to have show that they have enough income to pay the property taxes on the house and the insurance and any maintenance that's required, which is usually very minimal, and people's Social Security usually can pay for that. That's about all the income qualifying there is on it. It's not like buying your first house where you had to submit all these documents and papers and prove that you had a DTI or debt to income amount of a certain amount and jump through all these hoops. Since you're getting the money instead of qualifying for a large amount, then the qualification process is much easier. The main thing being age 62 or over. So in summary, what you've been doing for your whole life probably is putting money into your home bank. And now if you'd like to get it out and use it any way you can, you can. It's done through a HECM or home equity conversion mortgage, and if you'd like any more information, you can call or text me or email me. My phone is 801-613-3746. Again, that's 801-613-3746, and my email is sberkley at Citywide Home Loans, SBERKLEY, and then at Citywide Home Loans. Thanks. Have a great day.